Good morning and welcome to the latest edition of What's Up Monday. This is Dominic Chirichella of the Energy Management Institute, and I'll be with you this week. I hope you had a good week trading last week. A little less volatility overall, but still a very interesting week in the trading world. Um, Again, you could, as I always mention, you can contact me at dchirichella at emi.org or go to our website for more information, to subscribe to this publication, or if you have any questions of me, please feel free to contact me at your convenience. So, with that, let's get started and see what things are looking like as we enter another week. Quick snapshot of where we are this morning. Oil is a little bit lower, and that's primarily being driven by some positives coming from the US dollar. As I mentioned before, we've had a little bit of a breakout to the upside. Equities are kind of a non-event at the moment. Um, uh, the refined products, with the exception of gas oil in Europe, are slightly lower. Gas oil slightly higher. For those following natural gas, about unchanged at the moment. So a low profile start to the markets this morning. Not a lot of directional indication yet, although it's early. It's only about 8 o'clock Eastern time, so we'll see where we are in a couple of hours. Trend-wise, the WTI trend certainly has been moving upwards, as is the June Brent contract. Both spot months now are June. The May WTI contract went off the board last week. And again, we could see a slightly higher uh, degree of movement to the upside from the Brent contract, which has resulted in a slight widening of the Brent WTI spread. But both of these contracts have been in a nice, albeit kind of sinusoidal trend to the upside. We could be looking at a bit of a move to the downside here, just strictly as a correction. If nothing else, the commitment to traders report, which came out on Friday, still shows the specs have a pretty large long position in oil, and what that suggests, basically from a contrarian point of view, is at any point in time it's susceptible to a round of profit taken selling. So that aside, as we'll see as we get through some of the other charts, I still view oil as being in a short to medium term uptrend, albeit with some up and down movement as we work our way higher. The Brent WTI spread has widened. We're approaching that $6 a barrel level, hit back here at December of last year. The economics of moving crude out of the United States is very supportive. We see the same conclusion from the Brent WTI Houston spread. This is the Brent WTI Cushing spread. Cushing inventories did decline last week, but we still have this geopolitical risk coming from the Middle East, and we see an ongoing commitment by OPEC and its partners to continue to suppress crude oil production, and that's supporting the international side of this equation, being the Brent side. So for the moment, this spread remains in an uptrend. How much higher we go will be a direct function as to how um, things materialize with inventories in the United States. All, as I mentioned, Cushing inventories did come down last week after increasing for the previous 3 or 4 weeks, but total U.S. crude inventories are coming down. So a positive on the U.S. side and a positive on the Brent side. So we could be coming into a little bit of a toppy pattern up here as we hit some resistance around the $6 level. We'll see if the market is strong enough to break out to the upside from that particular level. We look at the 5 year statistics where we are with the spread. We're a little bit below the 5 year average. So it's kind of in the middle of the road here, not anywhere near the maximums or the highs hit over the 5 years, and still well off of the lows here. So again, the market is approaching the spread cautiously, but at this level, we're still at a good number for exporting crude oil from the United States. Quick look at the products. Yes, much like crude oil, the products are in an uptrend. Again, very much a sinusoidal uptrend as we see here. We could be approaching a bit of a just a normal cycle move to the downside. Interesting thing, what we're seeing here is a little bit more momentum starting to come from the gasoline side of the equation. The lingering cold that we've experienced this spring in the United States is starting to subside. Maybe some normal temperatures are projected to hit the main heating oil markets along the east coast of the United States over the next week or two. And we are getting one step closer to the so-called summer driving season. So gasoline is starting to look a little bit more interesting than the ultra low sulfur diesel at this point in time. So I hope you have a good week of trading. I expect another volatile week. And again, if this morning is any indication of what the rest of the week is going to be like, we've seen a tremendous change in oil prices in the last half an hour. Oil went from being down about 20 cents a barrel to now being down about $1 a barrel for WTI, and now Brent is down about 80 cents a barrel. So the market is very concerned. The market is certainly far from stable, and I would expect to see that continuing. Keep your seatbelts on, use your stops, and I hope you have a very successful week in trading. Again, if you'd like to subscribe, you can go to the www.emi.org website. If you have questions, you can contact me. I'm Dominic Chiricheller at dchiricheller@emi.org. I'd love to hear from you and answer any questions you have. So again, good luck with trading, and hopefully we'll see you again next week.